Never, ever, ever place any horizontal lines in the middle as you see here. Make sure that you place it always on the outside. Why? So you can make sure that you have enough length to trade up to this violet line here than just having so many resistances. And this is where we don't have enough length to trade in that direction. This is where we don't have enough cash flow. My name is JT and I'm having a trading school. We're talking about within the first 3 to 7 months, people start making money, and I hope with these results that you see here that you can use it for your own trading to have your first trading performance using a demo account, of course. First of all, it is to ensure cash flow. Cash flow is if you would close your eyes and you would just buy or sell with enough leverage, you would make or lose thousands of dollars. That means, for example, in the beginning, we assume that the market, for example, we're here right now, we assume that the market is going either up here to this bigger structure high, or we assume that the market is going to this bigger structure low. Once we are seeing more obvious if the market wants to go up here or down here, if we would just buy and the market would go up here, this could be $2,000. If we would buy and the market would go down here, this could be like $4,000 of loss. With the not real money account is very important, day trading futures. So we ensure cash flow first to be correct some days, not every day. There will be days it will be way more obvious. You will see that the market is more near at the high at this reference than to this reference, so that it makes sure that within the next hours that the market would like to go up here instead of down here. Once we have ensured that, now it comes to the money management. That means how to adjust now $100 to make $500. And the answer to that is always to trade patterns. A good trading strategy has just 1 or 2 patterns that are occurring enough. It is very important to go with time management. That means if you trade for 1 or 2 hours, always ask yourself the question, how many times with this one single market did you have the opportunity to adjust maybe $100 to make $500 or $100 to make $200? Very important. The biggest money making activity of all my students so far is the risk reward ratio. So we need to adjust $100 to make $500. This is just something what is very important. So when we go here inside, and if you see here that the market is going up, it's all about a red and a green candle. In this case here, we are not yet in the US session. So what we do here right now, we go to a time where the US session is. This is going to be here. And you find here the bigger structure high, and you find down here the bigger structure low. Once you see that the market is pushing up and is more near to the bigger structure high as you see here, it is very important to make sure, can you assume that the market continues to go up or not? And by looking to the left, this is something what will give you the answer always. You look for the bigger structure highs, such as up here. You look at up here, like always these highs. And this is something what's very important that have not been touched yet. That means if you, for example, draw in a high here, you see that the market here was touching the high already. That means this is not valid anymore. Even though the market is going to react there, it's not that much valid anymore. So now we have here 2 highs as you see here and here. I'm going to show you this one when I zoom in how to see here the high. You can see here to be exactly here the high, right? And the most important thing is just when you see here the high, a green and a red candle is the high. Here's the next high, green and a red candle is here. And the next green and a red candle is here, that's a high. The low is just a red and a green candle. When you see that the market does now more green than red candles, of course there is a higher probability that when trading any green candle in this area will work better than any red candle. Because the green candle shows you always, because this is a 1 minute chart, within 1 minute the market was going higher. And if you see, look here for example at 5 candles, at 5 green candles, 1, 2, 3, 4, 5. We don't count here doji inside, it's like 6 minutes. Within 6 minutes, the market did this length. Within the next 6 minutes, the market did almost the same length. Now, within the next 12 minutes, very important, the market did almost here, like 50% here of the length. Like you see that the market does have weakness. And the main reason is because the market wants to go always from high to high to high, as you see here. So because there is this air in between, as you see here, because there is just nothing, there's no high here, the market will have a harder time going up, but it still does here. And I hope you can see this. It still goes here higher in rotation. It does more length up. This is pressure. This is one-sided pressure. If you see that the market does more length up than down here, And what the market also does, it does more green than red candles. So when the trading strategy now is to trade a green candle, it's important to enter the trade after a color switch. I think is good because a color switch gives you always the opportunity to see the red candle. This is the opponent. That means red candle is pressure down and the green candle is the pressure up. And you see here very obviously that the red candles are weaker because they are, you see here the length here is less, the length here is more up. You see here the length here is more up. And this shows you just starting here, they're trading any red and green candle. Here, here, and here. This is the money making activity, makes it good. So in between here, we have a lot of green candles. And when you just in the beginning, we use actually something that is called the anchored VWAP if the market is more wiggling around. It means if the market is trending, we don't use an anchored VWAP. If the market is wiggling around, we use an anchored VWAP on the bigger structure. If the market is too much wiggling around, we don't trade at all. In this case, we place the anchored VWAP here on the bigger structure low here. That means here the lowest point here, as you see here. And now instead of trading any of these color switches, because it's always about how many patterns do we have within 1 hour. And you see here 1, 2, 3, 4, 5, right? You have here many color switches, but only one of these color switches is touching the anchored VWAP, so we can place our stop under it. And only one color switch is working, as you see here. And this is how to go with quality. So entry would be after the green candle closes. The stop would be always under the anchored VWAP, as you see here. And the target is to aim at this smaller structure high, as you see here. So when having now enough leverage and adjusting $100 with the stop loss at the green candle, the entry is when the green candle closes, this would be a $283 trade because the risk reward ratio is 2.83. That would be too small, right? So we want to have always a risk reward ratio of 5 is very important up to this target. And as you see here, the market even reached this target here up. Why did it reach the target? Because as you see here, we have so much pressure. We have more green than red candles. And just within here from 16, that is 4 p.m. to 4:20, within 20 minutes, the market did this length. Within another 20 minutes, as you see here, the market does here the same length. Those are around 20 candles, what you see here within the square. So the next 40 minutes, we can also assume here, as you see here, if the market does here the same length, this was 20 minutes here. Another 20 minutes would be within this area here. You can see within 40 minutes, the market did 70, 60% of the same length again. What makes it very nice actually to trade here or even any color switch actually in the beginning. And when done right, this is something what is very important with the management. It's about how to adjust now $100 within a single color switch. That means a red and a green candle. The stop placement down here, and you see a risk reward ratio of 5. The next one is if you place now the anchored VWAP, for example, down here because it presses out the market, always when the market is more wiggling around. Entering here color switch, the stop placement is under the green candle and you will see how good it works. Risk reward ratio of 5 would have been achieved here. That's the second one. And the third one, you find here again a red and a green candle with the stop placement under the anchored VWAP again. Then you see it works again. The other color switch of red and green, they didn't work out. Why? Because it is above the anchored VWAP. And this is how this indicator can help you to improve your trading. So you have 3 things. Step number 1, identifying the biggest structure high or low, that it's enough cash flow in the direction. Step number 2, do I need the anchored VWAP right now? Are we more wiggling around or not? Do we have more green than red candles inside? More green candles is better for buying. And if we want to start selling, we need to wait like here until we have a lot of red candles, but only red candles will not do it because this pressure up here will show us actually that the market will wiggle here around. Check this out. We place the anchored VWAP on the lowest part. The market is here doing a color switch with the stop placement down here. And now we can actually assume that the market actually wants to continue to press up here. But this is where the US session is ending here. So there is less pressure. It's very important to trade always the market at the US session time. And there's just one single move very often, and this takes like 30 minutes to 4 hours, what is amazing. So step number 1, biggest structure highs or lows. Step number 2, making sure, do I need the anchored VWAP or not? Am I seeing lots of green or red candles? Am I seeing that the market does more length higher than lower for trading up, for example? And step number 3 is now, what is my color switch? Like how many color switches using the 1-minute chart do I have? Because if you would now use here a 3-minute chart or 5-minute chart, the big struggle here is just that you have 12 candles within 1 hour. your stop placement is really way much bigger, as you see. If you just trade here the green candle, your risk reward ratio is not 5 anymore. Your risk reward ratio is going to be 2.08, except you have here this one color switch here, as you see here, what has here a risk reward ratio 1 to 5. But that's more on betting, I think, because you only have one color switch here, as you see here. And before in the 1 minute chart, I was just showing you multiple color switches. You can see here 1, 2, 3 color switches with the risk reward ratio 1 to 5.